You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, markets are taking quite a hit. The precious metal sector is taking quite a hit. What is in store for us? Well, we're talking with David Erfle, junior miner Junky. David, we talked several months ago. We were talking about how great the market looked, how the fundamentals were in place, the technicals were in place. It went up, but then we had the failed rally. And you know what happens when there's a failed rally, right?
Yep. Failed moves lead to fast moves the other way. And that's exactly what's happening here. Yeah, we had the GDX and the GDXJ going up 9 of the past 11 weeks, but it was doing so on decreasing volume. And the higher risk juniors, a handful of them were joining the party, but as a sector, they weren't really joining the party. And the telltale signs were there, and then on Thursday of last week, when Powell came out and basically put 50 basis point rate hike right on the table and started talking tougher, the market finally realized, hey, the Fed's out to cause a recession. So we had a huge intraday reversal in the stock market, and we had a huge down day in the precious metal stocks, although the gold price was only down about $5. So we had, all of a sudden, we had the miners leading the metal lower, and we also had a big move lower in silver. So when the miners and silver all of a sudden shows relative weakness after showing relative strength for the past 2 months, then it was telling you that the gold price was going to get whacked. And that's what's happening today. Confluence of support down at 1890, 1900 is being tested right now. And there's pretty good support there. So if I was a short, I'd probably be covering here pretty soon. So we're probably going to get a bounce, probably to, probably around 1915, 1920 here pretty soon. But after that bounce is over, you got to look for that 1840, 1850 area possibly being tested. And that's the area where the gold price broke out of that 19-month consolidation pattern on war news. So I think that, and the shares are telling us right now that that's probably going to happen after a bounce in gold. So we got to gear up for that.
Yeah. Well, one of the things is when you get these situations where the broader market falls, it's going to take everything with it. We got margin calls, we got liquidations all over the place. And I think that's largely what's taking place now is liquidation of long positions. You knew this was going to happen. Really, when you look back, you can connect the dots. It's easier to look back and connect them than it is to look ahead. But when you start seeing the COMEX raising the margin requirement, that is a huge red flag. And we saw that about 6 weeks ago, I think. Mm-hmm. And we should have known then that this is what was planned.
Right. And then also we had the commercials were heavily short. Huge. I think it was the largest short position they'd had in quite a while. So, this shouldn't be too surprising. But everything that's happening in the long term is bullish for the gold price. But in the short term, we're still working on that handle, that cup and handle pattern in the gold chart. That's a little over a decade in the making. So, we're just gonna have to be a little more patient to see how this plays out, because we know the Fed is going to make a policy error here. They're going to raise too much, and just the thought of them raising too much is already hitting the markets. And like you said, I sent out an email to my subscribers over the weekend, basically saying, hey, when things like this happen, margin clerks become more powerful than central bankers. And that's what we're seeing right now. The gold price, as far as the ETFs are concerned, that's where people were participating in the gold market. It'd gone up for 13 straight weeks, massive inflows. Everybody has really good profits in the gold sector right now. So when the margin clerk comes a calling, it's the things that you have made money in that it gets sold first. And so that's a big reason why the gold price is getting whacked here, and also a little delayed reaction to the treasury yields going so high and the dollar going so high. The gold price has basically gone up with the dollar. Especially since the war started in Ukraine. Those have been safe haven plays. If you take a look at where the dollar index now is, the last time the dollar index was over 100, the gold price was about $500 or $600 lower than it is right now.
Correct.
So, all these people that say that the gold price goes down when the dollar goes up, that's just not true. The dollar is a safe haven currency for a reason. When people start losing faith in central banks, people start losing faith in governments, they're going to run to gold. And gold has also been outperforming Bitcoin this year. The Bitcoin chart looks very scary. So, a lot of people that said that, Bitcoin is a hedge against inflation, they were wrong. Bitcoin is the anti-dollar, they were wrong. Bitcoin is a better safe haven than gold. That's not true. It's a speculative vehicle, and, although the blockchain system is a sound one, anything that goes up that much for so long without a decent correction, it's gonna get whacked. And what we saw Bitcoin go from less than 1,000 to $68,000 in 5 years. And then we've had a 50% correction now from that 65,000, 68,000 area. And if you take a look at the chart, I would not want to see Bitcoin go below 35,000, especially not below 30,000. Then you're going to see a free fall. So if you see more panic selling coming into the marketplace, I'd be a little concerned if I was into Bitcoin.
Like David, during the Depression, the Great Depression, for those of you who don't remember the dates, it was around 29 to 39. World War II kind of ended it. People were selling apples on street corners. You know what they're going to be selling now? NFTs. It's like, brother, can you spare an NFT?
Brother, can you spare an NFT?
It's not funny because people are suffering, but you have to you got to find some humor in the worst situations.
Especially right now. I mean, there's just everywhere you turn, there's a dire situation. How would you like to be Chinese right now, living in Shanghai, and being locked down in your hotel, in your little house without any food? And it's starting to happen in Beijing now. That's 25 million people in Shanghai and over 20 million people in Beijing being locked down. And you got Shanghai as the largest port in the world. It's 4 times larger than the largest port in the United States.
Yeah.
So you're going to see supply chain issues continue. You're going to see food shortages. You're going to see. Look what just happened. Look what's happening right now after Macron won the election, and there's
blood in the
rumblings
streets
of him stealing it. They're rioting in many of the cities in France. The youths are up in arms because they're worried about Macron. They're worried about Macron instituting an EU army and them getting drafted. They're worried about getting drafted to protect the freedoms that they don't have anymore. So that's
a little bit of an irony there.
Yeah.
But these things happen. I'm coming up with a meme. United States of America, 240 years of interfering with the supply chain.
Something else we shouldn't be laughing about, but yeah.
But that's what governments do. They interfere with the supply chain, whatever it is, whether it's legal or
whatever they get control of, they screw it up. That old Milton Friedman said it was, if you put the government in charge of the Sahara Desert, they'd run out of sand.
Yeah. And you put them in charge of gold, they'll turn it into horse manure. That's it. This is what governments do because they're the accommodating loser. Who are they the accommodating loser for? The big club of which you and I and everyone else
ain't in it.
right? So true. So this pullback, it's to be expected whenever there's chaos in the broader market. It hits metals and it hits the juniors especially, but it hits all the mining stocks. The biggies,
especially the higher risk juniors. They consume capital; they don't throw it off.
Exactly.
So,
exactly.
So all the quality junior babies get thrown out with the bathwater.
Oh, they get thrown out first. Thrown out first. But because if the gold is going down, what do I need this miner for?
Exactly. Exactly. And you got inflation going up, and yet the gold price is still hanging around between $1,900 and $2,000. Yet inflation is still rising. So the cost to get it out of the ground is rising. The cost to build the projects to get future resources out of the ground is rising. Newmont came out last week and with their financials, and they missed because inflation's hitting their bottom line. The Newmont share price is taking a hit, but before that took place, Newmont made an all-time high, even though the gold price did not. So it was something. The miners were leading the metal, and then all of a sudden they weren't last Thursday.
Yeah, well. We should talk about inflation because it's 8.5%. Ridiculously understates the actual rate of inflation.
Oh yeah, if you took John Williams, who's done a great job in Shadow Stats, figuring out what inflation should be based on the way they used to calculate it before they started all these hedonic adjustments, like replacing steak with hamburger and things like that, and housing, mortgages with owner's equivalent rent and things like that. Right. So yeah, I mean the real inflation rate's about 16-17% right now.
Easy.
But what's going to happen on this Friday is the Bureau of Economic Analysis is going to release the PCE index, and that's the Fed's preferred gauge of inflation. That's going to be released on Friday. And the forecast is for it to edge a bit lower to 5.3% on a yearly basis from the March in reading of 5.4%. So if it's a little softer, that's probably going to weigh on the dollar, and that'll bring some support into gold before we get Fed speak next week. But if it's a stronger result, that could actually weigh on gold and lift the dollar higher, as everybody's concerned about what the Fed's going to say and do next Wednesday. They're all on a blackout period right now, so they can't open their mouths anymore. They can't talk tough anymore. They're going to wait to be judged on their actions next week. So it's a half a point rate hike is priced in completely. But what's not priced in is how tough they're going to talk. So remains to be seen what's going to happen next Wednesday.
Talk is cheap. Oh, going back to China, one theory of why these lockdowns are occurring, and it is an overreaction because we know, without getting into the details and getting censored, we know that this health issue has kind of, everybody's over it. If you can,
everybody except China. I mean, you've seen the videos out of Shanghai. It's like from some dystopian futuristic movie. Kerry.
Yeah. So they're doing it to basically crash commodities prices because they're too out of control. Their whole model of the export-driven economy turns to rubble when you've got 16% inflation and commodities are running, some of them 100%. I haven't looked at the index lately, but, energy.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, I mean, a lot of the indexes have peaked now, and they're starting to roll over. I mean, they just went parabolic. So that's another reason. When we had everything reverse on Thursday, all 11 sectors ended in the red on the week, and that's including defense sectors. So everything's being sold right now to build up cash and put some money into King Dollar to be safe before the Fed comes out and talks tough or ends up backing down. But I don't see that. The market's pretty much priced in the fact that they're expecting to have a Fed funds rate of 2.75%, 3% by the end of the year. I don't see how they could do that, not with all this debt. I mean, the U.S. debt is over 30 trillion. Global debt is over 300 trillion. The interest payments. I mean, the interest on all that debt makes up 70% of our national debt already.
Yeah,
it becomes too expensive to carry. And
why didn't we become bankers, David?
Yeah.
Why didn't we become bankers? We were so dumb. All you had to do was just go to college and get a degree in finance and become a banker, and then you could print money to your heart's content.
Yeah, well, the piper's coming due now. I mean, it's really going to be interesting to see how this all ends because, I mean, let's face it, the Keynesian model is collapsing right now.
Yeah. And it should have collapsed. It should have collapsed decades ago.
2008, it should have. They should have let it collapse in 2008, but they didn't. They saved
Before
it.
That.
Bailed out all the banks. They recapitalized all the banks and just kicked the can down the road and to make it worse later on. And now that's what we're forced to deal with.
It should have collapsed in the 80s, right? It was collapsing in the 80s. In the 90s.
Yeah, Ronald Reagan wanted to put us on a gold standard.
Yeah. Yeah, that's correct. And they managed to bail it out by killing the hunts and crushing the metals market so that precious metals became an undesirable asset class, a disfavored asset class. Then in the 90s, we got the internet. Boom. And that really did hypercharge global growth. No question about it. And opened up everything. Like, look what we do. It's all as a result of that. But now the world
we became all together. It became this big. Everybody's working together. And now that's being destroyed. Nixon working so hard to separate China and Russia. And now Biden's ruined all that, but the Biden administration's ruined all that in just a few months, bringing them together, kicking Russia off the international SWIFT system was just an asinine thing to do. And so now, World War III is probably an inevitability, unfortunately. So we just all have to wait to see how it's going to play out. I'm concerned about the world right now, even more than I'm concerned about the gold price. I'm just concerned about it.
I have a solution for you, David. Learn how to dance.
Learn how to dance?
Yeah, because when you're dancing, you don't really care about anything else going on in the world. It's the best thing in the world. I've done it. It really is like the best thing I've done. Hey,
just go to Arthur Murray.
Whatever, or Fred Astaire. But point is, really a more serious point is you can't get caught up in what's going on.
No, you can't.
Around.
You got to enjoy what time we have, what freedom we have,
your life,
what
your
peace
family.
we have while we have it.
Absolutely. Because it can always get worse. Just like elections, you say, God, that guy is so awful. You should elect someone else. It can always get worse. And in fact, during my lifetime, it always has. From one to the next. Since Reagan, it's gotten worse and worse.
Yep.
And no end in sight.
And it doesn't matter what party either.
What's a party?
We had a terrible Republican president in Bush Jr. We didn't think it could get any worse than that. And now look what we have as a Democrat president. I mean, it just doesn't matter.
Oh, it's irrelevant. There's only one party. That's the RICO party. Racketeer Influence.
The RICO party that lives in the swamp.
Yeah. Yes. The RICO party. And what a party it is. But hey, this will turn around. I think even the stock market will turn around because
I think there's probably one more pop left in it.
Inflation. Hey, remember what happens when you got high rates of inflation? Companies can raise their prices
Right.
at will.
Right. And the capital flows, the EU's completely destroyed, negative interest rates for 8 years. And that capital is going to come over here.
It has been.
So,
No question.
yeah,
That's why the market's been as strong as it has.
exactly.
Swiss central bank buying stocks, buying foreign stocks,
Right.
all of that. So, hey, and one other thing though, and we talk about gloom and doom, we talk about all these negative things. Overall, in our lifetimes, our lives have gotten better.
Oh, absolutely. We lived in a golden age. We
Yeah.
were very fortunate to live in a golden age. Absolutely.
And,
Up until 2020.
yeah, well, it'll still get better. Things are still improving. Technology. Hey, man, the best thing about having a Tesla is never having to stop in a gas station again unless I'm using the bathroom or buying a soda. Right? I mean, we tend to think of everything's ending, whatever, but somehow human life manages to go on, and things do get better over time. I think back to being a child of the 50s, and hey, things might have been happier on a family level. I was my generation, baby boomers, last generation of the nuclear family, but overall things have improved. So,
absolutely.
Can't lose sight of that.
Absolutely. And you gotta have faith. You gotta continue to believe that light at the end of the tunnel is not an oncoming train.
It'll be a golden light and a silver light. And you better acquire now while the prices are down. Although I'm sure the premiums have doubled in the past week, right? I'm sure physical bullion price premiums up substantially.
Yeah, if you want to go buy coins in a store, the premiums are still ridiculous. Absolutely. Yep. I mean, fortunately I purchased all my silver back in 2005 at like $5 an ounce. I haven't bought any physical silver since then, and I bought junk. That's what you want to buy.
You want junk.
If you want to buy physical silver, it's the cheapest price over spot. And if God forbid it does turn Mad Max, you have quarters, you have half dollars, you have dimes that are silver. People recognize what it is. And if you have to barter, you have to trade. That's what, then you've got your physical silver, hopefully it doesn't come to that, but you want to have some junk silver laying around, and also at least 3 or 4 months worth of cash laying around.
Yeah, definitely.
Only you and your family know where this stuff is. Just of course, a bunch of food and water, just in case.
Yep. Year supply.
Extra laptop.
Yeah. I have a year's supply of food scattered around the house. Got lots of ballistic precious metals also. And, cash. Past 2 months, I started, hoarding a little bit of cash. And you just have to be ready for anything. The other thing is, if you're on any pharmaceuticals at all, you need to get at least a 6 month to 1 year supply. I've been in the process of doing that as well. Really,
unfortunately, I don't take any, so
it's minor, but
I don't have to do that. But I hear what you're saying. Absolutely.
Yeah, just be prepared, because like we say, we got 240 years of government interfering with the supply chain, and there's no end in sight. And now we got China interfering with the supply chain, and every other country in the world. I don't know if you caught the article in Zero Hedge, but I sent it to my son, who refused to believe it, and he lives in London, that they're rationing cooking oil in supermarkets.
Oh, yeah. Yeah, I lived there for a year too. Yeah,
So all these things need to keep track of. And if you can afford Cuban cigars, go get a bunch of them, because Cuba is, if we're doing so badly, Cuba is definitely on the brink of collapse. Although it's hard to know, because the place has been collapsing for 50 years.
Yeah, you still see the bullet holes in the buildings from the revolution. Yeah.
And the pictures of Fidel and Che Guevara, like that monster, sociopathic mass murderer, but they're fading on the buildings, which is cool. Right. They don't even go through the illusion of maintaining them anymore, except in the main square, Revolution Square, I think it's called. But hey, just be glad you could be living in Cuba, right?
Yeah. Or Shanghai or Beijing.
Yeah. Or New York.
Yeah, exactly.
New York City. Hey, so go over to David's site, Junior Minor Junky with a Y. Just remember, he doesn't talk about all this stuff on there. He's mainly analytical about the markets, where you see them heading, David, what stock you should be buying or selling, select portfolio. One thing I love about your site, David, is you give all your subscribers the heads up before you buy, and you give them the heads up before you sell.
Absolutely. Completely transparent. We're all in one.
Absolutely. All right, David, we always appreciate your coming on. If you got a question for David, shoot me an email, kl@kerrylutz.com. Don't forget, sign up for free newsletter, financialsurvivalnetwork.com. David, be well.
Thank you. You too, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.